Hello everyone, Andy here. Welcome to the Crypto Wealth Cafe, brought to you of course by Dacxi, powering serious crypto wealth for serious crypto wealth investors. Here we are with another weekly episode of the Crypto Wealth Cafe. We're just going to take a little bit of a look at the markets before we start. Need to do what we always do around this time, which is grab yourself a nice cup of coffee, cup of tea, or a whiskey, depending on what time it is in your part of the world, and we're going to have a look at the markets. As I say, I think the theme of this week's episode is the crypto crash and why you shouldn't worry, because you don't need to worry on a long-term time horizon, but on the short-term time horizon, which is today, it's this week, crypto is down. All right, let's have a look at where we are. All right, if we start off at coinmarketcap.com, let's have a little look. And where is Bitcoin? Bitcoin is at around 37,900 and Ethereum around 2,600. So I said it was a crypto crash. I mean, it's it's a little bit hyperbolic. We're using hyperbole. I mean, I suppose on a 7-day time frame, we're certainly down. Bitcoin down 13% since this time last week, and Ethereum down 15% since this time last week. So I suppose that does qualify as a little bit of a crash in terms of where we were 7 days ago. Just slightly up from yesterday, but that's kind of meaningless, really. A lot can happen in a day. Even more can happen in a week. All right, so let's keep going. Let's start to put this into context. Fear and greed index. We're back to extreme fear. I think last week we were at fear. Ever since the start of the year, we've been either extreme fear or fear, simply because the markets are down since really we've been down since November. So no surprise then that the sentiment is bad and getting worse because the fear and greed index just kind of does tend to mirror the price action. When price is down, we're going to be in extreme fear. As we know, that can tend to be a good buying opportunity on a long-term time horizon. So we'll keep an eye on that as we go forward. I thought it's also good to just check in on, I suppose, the stock market. So this is CNN's Fear and Greed Index for global stock markets, and it's at fear as well. Not at extreme fear, because of the stock market is simply less volatile, so things happen a little bit more slowly in the stock market. But I suppose the point I'm making is so if we look at a stock screener, you can see stock market all in the red as well. So it's the point I'm making is it's not just crypto. This is a stock heat map. There's a lot of different stocks and sectors, but by and large, as you can see, stocks are in the red. And on the crypto heat map, well, let's see, funnily enough, I mean, this was red just an hour ago as I was prepping all my tabs, but now it's just jumped up a bit, so we're back in the green just for now. But of course, the larger point is stocks are down, crypto is down, and I think we all know why. There's one reason, and really it's the Ukraine situation. Will he or won't he? Is Putin going to invade or not? And I mean, I don't pretend to be a geopolitical war analyst, certainly wouldn't want to try and predict what Putin is doing, but I think it's obvious that he's got a lot of troops, a lot of artillery, a lot of tanks, a lot of air support, and they're kind of on the ground in or around Ukraine. So whether you call it an invasion or not, all signs point to yes at the moment. Could he still pull back? I mean, yeah, sure. But in the meantime, all markets are reacting to this kind of geopolitical intrigue, and yeah, war is not good for markets in the short term. It's kind of as simple as that, really. So Bitcoin is in stasis near 37k. Gold is extending gains as Russia starts Ukraine invasion. So that's kind of the headline. In tense situations, investors prefer gold and oil as opposed to riskier assets like stocks and crypto. And the further you get out on the risk curve, the more volatile things will get, which is really what we've seen in crypto in the last week. And that's why we've seen that sort of 13% decline as the Ukraine situation has just got more and more tense over the last 7 days. All right, so on the Bitcoin chart, it looks like this. Back in November, last all-time high, and the downward descending channel. Broke out of that 2-3 weeks ago. But since then, in the last week, it's just been down, down, down as Ukraine situation has worsened. So if we looked at, I often use Dave the Waves charts just because I think he has a good way of putting things into context. So Dave says with price retesting the 30s range on both local and macro time frames, odds are increasing of a visit back to the 20k range. So, here we are at the moment. We're up here around 37k. 20k, of course, is interesting because 20k is the peak of the old all-time high from December 2017. I mean, to be honest, I'd be surprised if we got down that low. But we could indeed, Dave's saying we're due maybe to spend some time in the bottom half of this channel because we've been in the top half for quite some time now. Had a good bull run up here, spent some time up here. Kind of makes sense maybe to either consolidate in the middle or spend some time down here. Now, if we do spend some time down here, I'm not worried. I said the title of this episode is Crypto Crashes, but why we don't need to worry. And the reason is because, as I always say, on a long-term time horizon, I'm very comfortable holding Bitcoin and one or two other crypto assets on a 10-year time horizon. If that's the case and we do get down here, then these are going to be really a good place to buy Bitcoin on that 10-year time horizon. Because I don't know about you, but the way I buy my Bitcoin is I just buy a little bit every single week. And I don't, probably like you, I don't have as much Bitcoin as I'd like to have. So the longer I can keep chipping away at my stash a little bit every week, the more likely it is I'll be able to get to my target allocation of Bitcoin. And the only way I can get I'll get there easier and faster if Bitcoin does do a little dip down here. So that's why I'm not at all worried if it does. And that's Bitcoin. It does tend to be volatile, both to the upside and to the downside. So you just got to expect Bitcoin will spend some time down here at some point. But I'm not worried if it does. This is another way of saying the same thing. Dave, he's a little bit ambiguous with this, but he says the beauty of the logarithmic scale. He's not spelling it out, but I think what he means is if we spend some time down here, then we're going to spend time up here. But once we've spent time up here, chances are we may spend time down here. But on a long-term time frame, everything is continuing up and to the right. And I'll come back to that very soon. In the meantime, though, on a kind of shorter-term time horizon, Glassnode say that 33% of Bitcoin supply is now held at an unrealized loss, and a large portion of that is held by short-term traders, which means the bulls are faced with numerous headwinds. So if you want to look into their full report, you can go to Glassnode.com. Here it is. So they say Bitcoin faces sell-side headwinds. And the reason for that is a lot of short-term holders are holding at a loss. So I guess what they say is, as the prevailing downtrend deepens, the probability of a more sustained bear market can also be expected to increase the longer that investors are underwater on their position. And the further they fall into unrealized loss, the more likely it is for those coins to be spent and sold. But if that's you, don't be that guy. Don't sell your coins at a loss. I mean, and the only reason you would ever think of selling your coins at a loss is, you've got all your money in the market and you need that money desperately for something else, to pay the rent, feed your family, whatever it is. But if you're just holding those coins and you've got a stable income and you don't need to touch those coins, don't touch them. Just leave them on a long enough time frame. I guarantee you'll be absolutely fine. I don't guarantee it. But look, I think it's always come right before. I see no reason why it won't again. So I'm not going to go through all these charts. You can find that on Glassnode if you want. Let's just go to the conclusion. Overall, they say the Bitcoin market has numerous bearish headwinds in play, from weak on-chain activity. There's just slightly less buyers at the moment, to large volumes of supply held at a loss. That's the people that bought back in November, or anywhere above where we are now. Those people are holding at a loss at the moment, and some of them are new investors. Some of them will panic and sell. So it just means more headwinds to counter. But the summary is, despite the prevailing drawdown that has been in play over the last 3 months, underlying supply dynamics remain markedly more constructive than previous bear markets. One of the reasons for that is that Bitcoin investors are now appear far more likely to hold on for dear life, just hold their positions, and the more sophisticated investors will use derivatives to hedge their risk rather than selling their spot coins to reduce exposure. So what they're saying is, it just means even if we are in a bear market, or the bear market continues, it won't be as severe as previous bear markets, and it won't last as long. So it does look like a bear market, say the analysts at Glassnode, but do keep in mind that longer term, the bear market authors the bull market that follows. And I tell you, the best time to buy Bitcoin is in the bear market. It's harder to do so because prices are down, sentiment is down, the mood is down. But man, when the bull market returns, if you bought in the bear market, you'll be very pleased you did. All right, let's just keep going. Any good news in the market? Well, there's always good news. And look, I've spoken before about kind of my theme for this year being increased global mainstream adoption. And I think that's happening. Even if the price is down, I think mainstream adoption is continuing. And to me, that just means that when the bull market does resume again, it'll just be that much more explosive. So here's like a couple of headlines I really just pulled out this morning. So Intel have unveiled a new Bitcoin mining chip, and they're already working on the second generation of this chip. Look, it's pretty nerdy stuff, but essentially, Intel are a big producer of computing microchips, and they've entered the Bitcoin mining industry, and their chips are very powerful and very energy efficient, and that's just a good thing for the Bitcoin mining industry. What else? Southeast Asia's largest bank, DBS, are launching crypto trading for retail investors. So DBS is the largest bank in Southeast Asia. They're planning to launch cryptocurrency trading services for their retail clients this year. So again, there's all sorts of banks around the world are suddenly dipping their toes in and making Bitcoin and crypto investing available for their retail investors. Here's another one. Korea's largest bank is set to launch the country's first crypto investment fund. So the Kookmin Bank, which is South Korea's largest bank by net assets held, plans to launch crypto investment products targeted at retail investors. So same thing again. We'll have, what was this one? DBS is the largest bank in Southeast Asia. Kookmin Bank is the largest bank in South Korea. Both of them making available crypto investment products to their retail investors. So that's a good signal. Same in Russia. You know, Russian Finance Ministry has submitted a proposal for a Bitcoin regulations, and the regulations would allow for investing, if not direct transactions. So again, look, I mean, you can never really know what's happening in Russia. It does tend to change week to week, same as it used to in China. But again, the general trend is clear, a kind of softening in their attitude towards crypto investing. What else? Here's something slightly different, but you know, there's headlines like this every day, but I just saw this one. Today, Spotify is hiring a senior back-end engineer to explore Web3. Don't know what that will entail. Could be NFTs, could be something else. But again, you know, it's just all these big companies like Twitter, Spotify, Meta, Facebook, they're all slowly but surely moving into Web3, and that ties in perfectly to this narrative of increased mainstream adoption of crypto. All right, my old mate Raoul Pal on Twitter. So he kind of said the same thing. He just wanted to look at some of the Google search trends. So first we've got Bitcoin kind of treading water. ETH decently strong. Yeah, so while Bitcoin, you know, back in 2017 peaked here and hasn't really got back there, ETH looking incredibly strong, you know, so very strong interest in ETH. DeFi steady, but not necessarily spiking or growing. NFTs are the new hot breakaway, he says, because look at that incredible growth. NFTs just booming. Same with Web3, I think. Yeah, Web3 very strong. So look, I mean, you can't take, this is just Google trend search data. So I think the general point here is, again, it's just showing the same thing. You know, let's just use the ETH chart as a good one to kind of map the interest in cryptocurrency. I think, you know, from this peak back in 2017, then we went through the 2018, 2019, 2020 bear market, and then boom, we had the pop up. In 2020 and 2021 we're down slightly, but you know, just incredible growth. So what's the longer term trend? Increased mainstream adoption. Yeah, and this is going to say that we're going to show the same thing here. So again, slightly nerdy, but this guy Jurian Timmer, he talks about Bitcoin effectively being in a choppy trading range for almost a year now, just kind of chopping around between 30k and 65k. But on the long-term time horizon, he says what matters is the growth of the network. This is, you may have heard of Metcalfe's law, which is just it's a good way of understanding the growth of networks. And I think that kind of the high-level summary of Metcalfe's law is the more people that are using a network, the more valuable that network comes. So you think of things like mobile adoption rates or internet adoption rates around the world. They tend to follow that kind of S-curve growth, you know, and they start off slow, and then as more and more people join the network, they accelerate. So what this guy Jurian is doing here is he's kind of extrapolate how Bitcoin's demand curve is growing and where it's going, and he says that that answer continues to be up and to the right, because we see that the number of Bitcoin addresses with a value of more than 0 continues to slowly move higher following a simple power regression curve. And so the orange line there is the curve, and this is that the price, or maybe it's no, it's the Bitcoin market cap, and then the dotted line is the number of addresses with non-zero. So it's following the price, and it's following this power curve, right? So if we compare that to, as I said before, growth of mobile phone users around the world, or Apple's rise to network dominance. So long story short, this guy says what is next for Bitcoin's demand curve, and he uses two of those historical S-curves, mobile phone subscriptions and internet adoption. So they both show slightly different slopes, but they both follow that same power law up and to the right, and Bitcoin is following that same curve. So if you extrapolate that out over the sort of next 10-20 years, where's the Bitcoin price going to be? Well, it's going to be up here. And funnily enough, where's a $1 million Bitcoin? It is here. So according to this, and look, I mean, this is just a bit of fun. We don't know if this will be accurate or not, but you'd expect to see a 1 million Bitcoin, depending on how aggressive you want to target this, either on an aggressive time frame, perhaps 2029, 2030, on a more conservative time frame, perhaps 2040. But it shows the risk reward for Bitcoin is still very strong. All right, another way of saying this, I like this, from Josh Wolf. He just says, find a directional arrow of progress. They never fail. So if you can find a directional arrow of progress and invest in it, something that's going up and to the right on a kind of unstoppable long-term time frame, that's a good thing to back. And I think that's a really good way of talking about Bitcoin or Ethereum or crypto assets, NFTs, Web3, pick whatever one you like. Obviously, Bitcoin is probably the safest and the surest. The others are further out on the risk curve, maybe slightly higher risks, maybe slightly higher reward. But, the general trend is up and to the right. So this is the same thing. This is, Dave the Waves, a long-term chart. And again, it's just up and to the right. So, Dave's a bit more conservative, but even his charts on a kind of more, at a conservative level, could be anywhere in between, 300k and a million. But again, it's that's just 10, 12, 15 years away. But it seems like a pretty good bet to me. So, in conclusion, yeah, crypto, I suppose, is down over the last week, and that's simply pure market sentiment. People are selling because growing global tensions in the Ukraine, and perhaps people anticipating that Bitcoin is in a bear market for now, so we could see further downside. But in my view, if you're buying a little bit of Bitcoin every week, as I am, further downside is nothing to be scared of, because you're getting more Bitcoin for your money, or Ethereum, whatever you're buying, any of those Dacxi bundles, it's the same thing. You're getting more coins for your dollar every week, and on a long-term time horizon, that's going to be a good thing. So that's why we say, if crypto is crashing, I'm not worried. All right, hope you enjoyed the show. I hope you have finished your cup of coffee or your whiskey here on the Crypto Wealth Cafe, brought to you by Dacxi, serious crypto wealth for serious crypto wealth investors. Hey, don't forget to subscribe to Dacxi's YouTube channel, by the way. And if you're still watching this video here at the end, I understand not everyone makes it to the end, but if you have made it to the end, give this video a little like on YouTube. We'd appreciate that, just as we try and grow the channel and grow the views to these videos. So if you've made it to the end, appreciate you watching. Thanks very much. We'll see you back again here, same time next week on the Crypto Wealth Cafe. Bye for now.